Hey everyone, good evening. It's Scott at Scott Trades on Twitter with your strategy session. It is Tuesday, February 13th, 2024, day before Valentine's Day. Don't forget to get your loved one some flowers or chocolates or something romantic for tomorrow. This is your official reminder. I was in the store today looking around and I thought, well, maybe I should just do it. I should just buy my wife this. And then I was like, nope, I'm going to wait till tomorrow because then the flowers are more fresh. So that's what I'm doing. Okay. Market pulling back here. S&P 500 back to the 21-day EMA. Still technically a higher low versus this earlier pullback from February the 5th. And the end-of-day volume is pretty interesting here today. Check this out. I'm going to zoom into a 10-minute chart. Look at the last 10 minutes of the day. Massive volume coming in. Maybe that's short covering, or maybe that is people jumping on what they believe is an opportunity in waiting. A great line that comes to mind is everyone wants a pullback until they get one. And that's one of the reasons that I like to try and stay open-minded as possible, even when, things look pretty dire as they did for part of the day today. We saw the VIX pop up today. I'll bring in the volatility index, way up to 17, almost 18 here, which is the highest level since November. Yikes. Like it hit a new high for the year. And I actually didn't think the volatility was that bad generally in the market. It didn't feel like a big panic out, but it was a big move point wise. At one point I saw S&P 500 or the SPY, excuse me, down to 490 on the day. So yeah, I guess that's a lot of give back in one day. Big spike in the VIX. And of course, this is all happening because of the higher than expected CPI that we got out today. The way that the market is pricing everything in now is we're looking at June or July before we get a potential rate cut from the Federal Reserve. That, of course, could change if we get new economic data, and they are data dependent, and they are going, new data piece versus new data piece. And so we are kind of at the mercy of some of that economic data that comes out. And so I believe it's still important for us to follow along with what's happening with, macroeconomic indicators like CPI, like ISM, and the like. So that's kind of what I think is important for us to watch right now. And that's one of the reasons that I share, the macroeconomic news that I see and that I, view to be important in the Telegram channel. And so if you are a member of Stock Market Mentor and you're not in Telegram yet, I definitely recommend getting in that Telegram channel. We do push alerts, whether it's breaking news that I think is market important or trade ideas from Dan, webinars, podcasts, videos, it all hits on the Telegram, a lot of times faster than in your email. So if you're not on Telegram, be sure and email Karen at stockmarketmentor.com and get on the Telegram channel. But like I said, I do view this as a potential opportunity in waiting based on some of the end-of-day price action. That, of course, could change. We may get some downside follow-through tomorrow. But if we do, then we are knowing what to look for, because this is something we talked about, at least in my videos we did, looking for some potential support levels. And I mentioned this level here, right around 490, this low from this day here, that is 490.23. That's kind of the line in the sand, at least for short-term active investors, because if we get a close under that level, that's a lower low, and then that could lead to a bit more of a cascade of selling, weak hands, getting out of positions, etc. You may see some increased volatility, another spike in the VIX, coming down the pike. So that's kind of what I'm looking for if we do see further downside. But I am constructive on this market just based on the end-of-day action. That's some big hourly buying volume into the close here. And even if it is short covering, it's still pretty interesting that the shorts didn't feel emboldened by pressing down on more on SPY and on Qs, and that they felt the need to cover. And I think that kind of speaks to a bit of the strength of the market overall. And so I want to keep that bullish stance. I want to keep open-minded to be long risk in this market. Another indicator that a lot of you know that I look at is Bitcoin and crypto. So if I go BCT USD and take a look at Bitcoin right now, Bitcoin did not make a new low today. It actually held above yesterday's low. And yes, at one point today, it was down $1,000, over $1,000, something like that. But it didn't break trend at all. And you would expect when we get a higher than expected CPI report, risk off, right? That's what you would expect. That's what I kind of thought would happen today when we saw Bitcoin drop after the CPI, when we saw the futures continue lower after the CPI. But what we saw was, yeah, we saw lower price action, but we also saw them come up and actually hold up price here, at least on Bitcoin. I'll flip to an hourly chart again. Hold up around that $48,000 level. I mean, oh my goodness, Bitcoin down to levels it hasn't seen since yesterday. So it didn't seem like a big panic out, despite the market pricing in rate cuts further down the year than expected. So we'll see. Maybe this is what Dan refers to as a shot across the bow. I look at this again as potentially opportunity in waiting. We'll have to see. And of course, that's all based on your time frame. So I want to look for upside follow through tomorrow in the market, or at least not making a lower low here on SPY. QQQ, very similar, holding above that 21-day EMA, unable to get above the 8-day, but again, held above these previous lows from back here, February the 5th and February the 7th. Is that right? Oh, sorry, 6th. Get my days mixed up here. Still getting used to TradingView, by the way, but I think it's working out okay. So it's still just kind of pulling back here. So again, I want to look for opportunity in this market and maybe a chance to add to longer term positions. If you're in SPY, if you're in the Qs, ideally, you're not adding near the highs. You want to add in and around key moving averages to longer term positions. And so again, that's what I would look for here if we continue to hold up above that 21-day. I think the 50-day is the big line in the sand for both major indices here, QQQ and SPY. A close, if we do continue to see further downside for whatever reason, that 50-day moving average should be a big trigger for you. If we close under the 50-day, I don't want to see this happen to the market where we close under the 50-day and then see continued downside follow through. Now, I'm not predicting that because I'm not really seeing any indicators suggesting that is coming. But again, I want to know what my line in the sand is. You really got to plan that trade out. Just lay your plan out, I guess is what I'm trying to say. So you know what to expect. If this, then that, then you know what to do. And you're not acting from a place of emotion. That's one of the reasons that I recommend to people when it comes to goal setting. I'm a big fan of goal setting and gratitude, daily gratitude, etc. I'm always like, write it out. Write out your plan. Write out your playbook, your script. You see major sports teams like in the Super Bowl, they have every scenario possible planned out. So then they don't think from emotion of the game. They have their plan right in front of them, and they can just say, okay, this happened. This is what we want to do. And I remember that we thought about that ahead of time. And so that's what I want you to do with your trading. You really got to treat it like a game plan, like a business. If this, then that. And so if we do see further downside and a break of that 50-day moving average, you better believe that my recommendation is going to be to step aside from this market and wait for the market to recapture that moving average. We're not there yet. We're not even close. But again, I like to think 2 to 3 to 4 steps ahead so I know exactly what I need to do if something happens, if that scenario plays out. So as it stands right now, we're still in trend above that 21-day EMA. Bit of an ugly day. But again, that hourly volume into the close, 30-minute, I mean, come on, that's a monster green bar. So I want to see if the market can build on this momentum in the close, into the close tomorrow. We'll see what happens. We are seeing some stocks like SMCI, for example, up after hours, up $7 after hours. I mean, this thing is not going down. And if you're looking for the top, wait for it. Do not get in front of this freight train and try and pick the top and try and short the top. I said that exact thing a few weeks ago when I was talking about ANF, Abercrombie and Fitch. Someone in the forum was talking about trying to short this stock for a couple of points. And I looked in the camera, I'm pretty sure, and I just said, do not get in the way of this freight train. Look at this trend. What are you trying to do? Do not try and pick tops. The top will show itself. And if you want a great strategy on short selling, then check out Dan's course on short selling, because he gives you the exact playbook on what to look for shorts. And so I just want to throw that out there, because I saw this one hit a new high today as well. And I thought, man, I hope whoever was trying to short this did heed my advice and not get in the way of this freight train, because it's just not going down. Same thing with SMCI. I saw someone on Twitter today going, oh, SMCI, it's going to fall hard. And I looked at the chart and I said, well, what gives you, I said this to myself, not out loud. I said, what gives you the indication that this is done going up? Like, it's still above all the major moving averages and we don't have a break yet. So you're trying to predict, you're trying to look smart. And anytime I try and look smart in the market, I get humbled real quick. So again, I'm editorializing here, but I really want to protect anyone I can from getting blown out because they tried to pick the top of a really strong stock. The top will show itself. It always does. Just wait for that signal. IWM looked really ugly today. This could now turn into a potential pullback to the 50-day moving average, maybe a phase 1 breakout, phase 2 pullback, but it's got to hold above that 50-day. Ideally, doesn't make a lower low here. The volume, again, really ugly on the daily, but let's go to the hourly. Not really much better, to be honest. It did make a lower low on the hourly chart, but it does need to fix itself and get back above all these major moving averages, close above that 8-day exponential, and really kind of show its strength. And if it does that, then this would just be what I said in terms of an opportunity in waiting. I don't want to front run anything. We want to see those signals play out. We want to act at the right time. But for now, this is not an ideal situation for the IWM. Obviously, a lot of interest rate sensitive stocks in this index. And if we see the dollar continue to pop like it did today, if we see the 10-year continue to rise, then I have a feeling we're going to get more of that downside volatility, or at the very least, chop and slop. All interest rate driven volatility here today. The CPI came out under expectations. I have a feeling the market would just rip, just continue to rip, because then it would price in moving those rate cuts forward as opposed to pushing them back. And so that's really kind of the battle that's playing out right now in the market. And for us as active investors, it's just about being patient and really picking our spots properly with clear lines in the sand, not throwing caution to the wind, but looking for opportunity near clear support zones. So hopefully that's helpful. SMH still okay, near the 8-day exponential period moving average. Again, this is up slightly after hours, probably due to SMCI being up as well. I'm not sure why SMCI is up after hours. If you have that news story, and you're watching this video and you know what's up, please share that with us in the forum. I love seeing people share news and information in the forum. I think it's a great community that we have at Stock Market Mentor. I can't do it all. Dan can't do it all. We're all doing our own thing. And so if you have something that is worth sharing, by all means, post it in the forum for everyone so they know, especially on a stock like SMCI that a lot of people are watching. So semiconductors okay, above the 8-day exponential period moving average. Keep in mind, NVIDIA earnings are coming up. Looks like next week here, and they really will, I believe, draw a lot of the narrative when it comes to semiconductors. I think they're going to need to meet expectations or beat expectations. If there's a bump in this road, then I think we're going to see that ripple throughout the sector. And so just want to make you aware of that. I think at this point, if you're long NVIDIA and you have it from down here, I think you're probably okay to take partial profits before earnings. Depending on your cushion, whatever your process is for that, I like to sell about a third before earnings. If I don't have a good cushion, I'm out completely. And then I'm just at the mercy of having to buy back the next day if I really want to. But if you're in a good position here, maybe you can take partial profits. Maybe instead of a third, maybe you're just taking a quarter because you probably have a nice big fat cushion in this. And then you're looking to see what earnings brings into next week. So that's what I would say here on NVIDIA. It's a roll of the dice, could go either way. And so just know that, know that there's no edge in guessing. XHB, I talked about some of the home builders this morning in my morning note. XHB pulling back to that 21-day EMA. A lot of home builders are looking okay, but again, there's a mix of earnings coming up. Some have reported, some haven't. And so I think XHB looks okay as long as it can continue to hold up above today's low. Today's low is 96.13, so let's round down to 96.10. Ideally, a close above 96.10 here for XHB to hold above that 21-day. Okay, I mentioned Bitcoin's underlying strength right now, the fact that it didn't make a lower low. We're also seeing that play out in some of the ETFs. These are holding up okay. I am long FBTC myself. I'm in at around $36. We talked about this during the webinar. I didn't do anything with it today. Pretty well allocated. Someone asked me about an ad today on this. I think you really want to wait for Bitcoin to kind of come back to the 8-day or the 21-day EMA before you're adding to your Bitcoin ETF holdings. Not that that means that you're going to get the lowest price, but it's just a higher probability add rather than trying to chase it higher. I mean, if it makes a new high and you get the FOMO and you need to add some, that's up to you. But my recommendation is always, especially with Bitcoin, these moving averages tend to act like a magnet, and the best entries come in and around these key moving averages, whether it's the 8-day, 21-day, 50-day, depending on the extension of the asset, how high up it went, and how long it's been consolidating for. But that's kind of my thought there. So if you're long some of the Bitcoin ETFs, I'd wait for this to kind of come back into support. You may miss out on some of those gains, but again, it's just about probabilities here when it comes to adding to positions. Okay, let's look at GE. GE in a nice strong uptrend above all the major moving averages here. I have a feeling it's probably going to try to tackle some of these previous highs. I'm looking up here at around 150, 160, just kind of go up by tens. That's what I would look at here, kind of looking at these previous zones of resistance. So that's what I would look for here. Again, I mean, this has just been going and going and going since November, and it hasn't really looked back, but it has offered opportunity at that 21-day EMA. So I think that that's a higher probability buy, waiting for a bounce off that 21-day EMA if you can get it. They don't have earnings until middle of April by the looks of it. Okay, let's look at Sentinel-1. This is ticker S. Sentinel-1 pulled all the way back to the 21-day EMA today, but closed above the 8-day. So pretty wide ranging bar. Ideally, I'd like to see this tighten up a bit. I'd like a little tighter price action. It's a bit wide and loose. Earnings aren't until a month from now, so it may give you that opportunity. But keep an eye on this just because it did have that nice strong bounce off that 21-day today and closed above the 8-day. So, I mean, look at this big, long wick. Dan and I were talking about hammer candles in our live webinar the other day, and this, is coming up against some potential resistance, some supply. But again, that's why you want to look at it on a daily chart and look for that tight price action. It's just a bit loose right now, but it is above all the major moving averages. Broadcom, open lower, closed just right at the 8-day EMA. They don't have earnings until the 7th of March, so I have a feeling it has a chance to continue higher if we do continue to see strength in some of these tech stocks. AMD, very similar, bouncing off that 21-day EMA today. Ugly candle here yesterday, a miss on earnings recently, but if we continue to see some of that strength, I can see a bit of a downward sloping trend line right here on AMD. That's pretty clear. I would look for a strong move through that level coming on volume. CrowdStrike, nice bounce off that 21-day EMA. They have earnings coming up on the 5th of March, so there's still time. Every bounce to the 21-day, at least this year, has been a buyable pullback here on this stock. And so you just want to watch that low. A close below there, you're wrong. Time to go. It's not ready yet. And so I would look for this support level around that 21-day to hold on CrowdStrike. Okay, Giga Cloud. There's lots of questions about this in our live webinar the other day. This is one that we've been following a bit. I'm not involved myself. I'm a bit in the crypto land, still in that world. But again, this is trending nicely here, and I have a feeling it's probably going to try and tackle that high. It's a bit extended above the 8-day right now. I'd like to see it base out a bit. But don't lose sight of this one because it could give you an opportunity to get in with even a small position, just down to the 8-day EMA or the 21-day, get in close to support, and then add as it rewards you higher and potentially challenges its IPO enthusiasm high from September of 2023. MongoDB looking okay here. It did pull back to that 8-day EMA. They have earnings coming up on the 8th of March, so there's still time there. I'm going to zoom in here really quick. And again, I think same kind of story. You don't want the stocks to make new lows. If you get two lower lows in a row, makes a low, makes a lower low, you're in for some potential consolidation or even a trend change. Doesn't mean it's guaranteed to happen. But again, we live in the gray. We live in the world of probabilities. So a lower low here would not be ideal. Could bring it back to the breakout zone down around 417, maybe even touch the 50-day at 412. So you don't want to be buying at 469, 475, something like that, and then have to ride it down to 413 just to figure out if you're wrong or not. So I would definitely keep an eye on this. I think if it can hold up above today's low, you're good to go. Datadog, again, a wide-ranging bar today, but clear support at that 50-day moving average. Looks like today's move was on earnings, and the dog was off the leash first thing in the morning. I'm going to zoom into a 10-minute chart. Look at this wide price action. My goodness, I got to measure this just so I know. How wide was the first 10-minute bar? 12%. 12% range in the first 10 minutes. And then, you're thinking it's going to go to the moon. And what happens? You end up getting chopped up all day long. So definitely keep an eye on this one. Looks like positive earnings, but a bizarre reaction. Again, I have a feeling a lot of this is market driven. If the market was continuing higher, probably this would follow. But because of the market volatility, yeah, it kind of plays out differently with different stocks. So definitely keep an eye on this one just because it looks like positive earnings and a wide-ranging bar. Clear support at that 50-day moving average, though. So as long as you're holding up above that 50-day, ideally the trend is still intact. Okay, ServiceNow, nice move here through the 21-day EMA. Earnings, not an issue. They had earnings at the end of January, and so that's nice. It's nice that now we're going through some of these earnings, and the earnings risk is kind of out the window. You really want to look for those positive earnings results. Ideally, if they have a miss here and there, that's fine, I guess, as long as the trend is intact. But ideally, you do want to see these green E's on your stock, whatever stock it is. You want those positive earnings results. So this looks good again if it can hold today's low, and that's around 750. So I would, any trade on this stock, I think you want to trade against that 750 level on ServiceNow. Okay, TransDigm. Nice upside reversal here on TransDigm. 3 red days in a row, lower open, but closed above that 8-day EMA and did it on higher than average volume. It's a bit of an expensive stock. This one isn't for everyone, but again, I'd watch today's low. Ideally, the low from today's upside reversal holds, and that level is right around $1,100. So any trade on TransDigm, TDG, I think you want to trade against 1,100. Okay, this is Emerson Electric, ticker EMR. This one just kind of caught my eye today as it had a bit of a consolidation base. Looks like a gap up on earnings. It held the gap, a bit extended from the 8-day EMA, but if I zoom out here, you can see that it's actually coming back to some of its 2021 highs. And so while this looks like it may break above that all-time high, I just want to keep it on your radar because it is close to that all-time high. If I zoom out here, it hasn't been above this level ever. And so I think 106 is definitely a level to watch. Watch for that breakout higher and then look for a pullback to the moving averages. But again, just want to keep this one on your radar. Earnings for them coming up at the end of April by the looks of it. So again, earnings not an issue with Emerson. Okay, just a couple more for you. And then after, I kind of want to give you my thoughts on gold right now, or after I go through these videos, but I do want to give you some quick thoughts on gold. Okay, top build. This is kind of in the home builder section, holding that 21-day EMA here. Earnings coming up at the end of the month. I think it's okay as long as it can continue to hold above that 21-day. It keeps printing higher lows. That's a positive. So watch for some upside follow through here on BLD. Lennar holding that 21-day as well. Bit of a dip down to the 50-day moving average. Earnings not till the middle of March. So this is one of those ones that, you know what? Actually, not too bad. We'll look at Toll really quick. They have earnings coming up next week. So that's why we're not looking at them tonight. Okay, and in the biotech space, I want to bring Neurocrine Biosciences to your attention. This is ticker NBIX. Just followed this one today because of this upside reversal through that 50-day moving average. A bit of a steep move here. Looks like a wacky day on earnings, but ideally it can hold above that 50-day moving average. Okay, my thoughts on gold really quick. Gold is disappointing the heck out of me. I've been watching the gold space for a while, and you can see this line here. I was really looking for gold to tighten up and break out of this move, but it hasn't so far. And so I just want to express caution on gold right now. Just generally, you look at some of the gold miners, they're making new lows. They're breaking down out of this clear level here. Again, sorry if I'm zooming in too quickly, but I think fast, I click fast. Upward sloping trend line, breakdown to the downside, higher than average volume on the miners. So I just want to, just express caution on gold. I was really excited about it when it was tightening up near the highs, and it has since broken my expectations to the downside. I heard a good argument today. The gold market is about $14 trillion, the gold market in its market cap. And so if it was to, let's say, triple in price, which a lot of things do, things go up 3x. Let's look at NVIDIA, for example. If gold was to triple in price, its market cap would then be bigger than the entire stock market of the United States. And so that argument is why I believe we are seeing a bit of a flow into some of the Bitcoin ETFs. Because if you look at IBIT or some of the other Bitcoin ETFs, Bitcoin itself is about $1 trillion asset. Let me double check. So the total crypto market cap as it stands right now is a $1.8 trillion asset class. Gold is 14. So the entire crypto market could triple and it still wouldn't be close to what gold is right now. So that argument of undervaluation and under allocation, I guess, for lack of a better term, is why I believe that we're going to see a lot more upside in crypto land. And so I definitely want to watch gold like I always do. But in terms of where I want to put my money, I kind of want to put it in the thing that everyone, I believe, is under allocated to, because I believe that that has a higher potential for upside rather than sticking with an asset that is already as big as gold. So, I'm still going to follow gold. I still love gold generally, but I believe that Bitcoin and crypto is going to be a faster horse just because of the size of the market cap and the potential for it to even triple in size and not even get close to something like gold. So gold, sorry, you're dead to me right now, at least until we can make some new highs. So I hope that video was helpful. A lot of fun hanging out with you. I'll see you tomorrow.